this system, I'll just get back. Okay. So let me start with the introduction. Right. So, good morning, all of you. Today we are starting a new chapter, that is hire purchase system and installment system. First block in our material, hire purchase system. Block 1 in our B.R. Ambedkar University study material. Hire purchase system, accounting procedure. So before we enter into the hire purchase system, the hire purchase accounting procedure, let us understand what is hire purchase system. So let me tell you, I'll ask you a question. Did every one of us, or almost all of us, might have entered into purchased so many assets on installment basis, right? Right? So we used to pay EMIs, right? So can you tell me on the day of, can you return that asset what you purchased on installment to the owner before the end of the installment? Can we? No. Similarly, whatever asset you purchased, that asset, are you going to your own on the first day of the purchase, or on only the person will tell you, showroom person say, only if you pay all the installments, you will own the asset? No. He will say on the day itself, though you are purchasing it on the installment basis, on the day itself when you purchase, you become the owner of the asset, right? The ownership from the seller to purchaser is transferring on the day itself, and you are only paying your installments, the price of the asset in installments. But so when the ownership is transferred immediately, and you have no right to return it in between the period, right? And at the end of the period also you can return, cannot return. But hire purchase is different. Under hire purchase system, it is and here also a person purchasing the asset under installments means the price of the asset, the purchaser pay installments, but the ownership of the asset transfers from the seller to buyer only at the end of the last installment paid. Okay, the ownership of the asset will transfer to the seller, buyer from seller only when he pay the last installment. Second thing is that he can return the product asset if any time if he want. He can return the asset anytime if he want. Okay. And those installments, whatever are like a rent. So whatever installments he pay on the asset, that is said to be rent under hire purchase system. Understood? This is the basic difference between the installment, what we regularly come across, payment of EMIs, and here the hire purchase. Done? Now let us see the further part of the hire purchase system. So the same thing, installments may be, and how do he pay the installments? He can pay the installments on annual basis, 6 months once, or quarterly, or monthly, or weekly, whatever convenient, depending on the agreement between the hire purchaser and hire seller, vendor. Okay, so assets or goods are delivered to the purchaser at the time of agreement before the payment of installments, but the title on the goods is transferred only after payment of the all installments as per the hire purchase agreement. Okay, so the special feature of this hire purchase transaction is that the payment of every installment is treated as a payment of hire charges or rental charges. I said now they are not called as an installment. It's like a rental charges. Okay, the payment that is the special feature of hire purchase system. It's treated as a rent till the last payment of the installment. After the payment of last installment, the amount of various installments paid is appropriated towards the payment of the price of the goods sold and the ownership of the goods is transferred to the purchaser. So once he pay the all installments, whatever amount of installments he paid for the price of the asset will be adjusted and then appropriated, and then the ownership of the asset is transferred to the purchaser. Okay, so if he paid all the installments as per the agreement, and the title of the ownership will be transferred to the vendor, sorry, purchaser. If you don't pay, he can return. So this make you understand. So deposit money. So in the hire purchase system, like in the installment also, we pay down payment, right? Initial payment, down payment, right? Same thing even in the hire purchase system, there is a initial payment of the down payment, which is called as amount deposited with the vendor, and the balance will be paid in the monthly installments or monthly rentals. At the end of the payment, the last installment, he owns the asset. I took the car for convenience. It's any asset is similar. So beginning, first, he will not pay. The day on which he entered into the agreement, he will not pay any installment, but he will pay some initial payment, down payment, or an advance. Deposit some money as an advance. After that, the balance he will pay in installments. Those installments we call as a rent. Okay. Those installments we call as a rent. Okay. You can't hear. My audio is on only. Are you? After you said you can hear only, I said. Class gets wasted, and concentrate what I'm saying instead of you chat and do. So, under hire purchase, he will pay the balance, first initial payment, that is the amount will be deposited out of the price of the asset. The balance will be paid in the installment. Those installments we call as a rental. And then the final installment, final payment, he owns the asset. So that's that. So now the hire purchase transactions, where goods are sold to the vendor, sold by the vendor to the purchaser. Generally, conditions will be like that. Delivered to the purchaser on the day of agreement only. But the purchaser has so the purchaser, like an installment buyer, can use the goods after once the delivery takes place, and the price of the asset, the goods are paid in a installment, which are called as a rentals, and every installment will be treated as a hire charges for using the product or asset. If there is any default in the payment of any installment or any month, if we fail, if the purchaser fails to pay the installment money or the rental money, then the owner, that the vendor, has the right to take back the asset. Okay, and he will not refund the amount also, because that is like a rent he is using. Like generally, where do we use this hire purchase system? Generally, hire purchase system, heavy machines, heavy assets. It's difficult to buy those heavy machines and assets by everyone. So for such case, in such case, generally hire purchase system they'll go. An installment system is like different from the hire purchase system. Under the installment system, the good, the product or the asset will be transferred to the purchaser on ownership. transfers to the purchaser on the day of agreement itself only. Okay, and here whatever the price of the asset is there will be paid in the installments, but he cannot return, and he has to pay all the installments. Okay, so here are the differences between the installment and the hire purchase system. So nature, it's like a installment is like a contract of sale. Hire purchase is a contract of hiring. Ownership, in installment, immediately ownership of the assets transfers on sale. But on hire purchase system, ownership transfers only on payment of the last installment. Treatment of installments under higher installment system, the balance whatever is paid in the equal installment, those are treated as loan, and the installments only we call. Whereas under hire purchase system, treated as a rent, we call it as a rent. Treatment of default payment, the under installment system, if the purchaser failed to pay, if the purchaser failed to pay the remaining installments, generally he can treat as a recovery against the loan only. Means he can sue or he can proceed legally only claiming that recovery against the loan, but he cannot take the asset. But under hire purchase system, no recovery. Instead of that, he can directly take back the asset from the purchaser. Okay, suitability, generally installment system for the household products which have no resale value we use, like TV, refrigerators, mobiles, etc. And hire purchase system for durable products which have resale value, like car, bikes, trucks, buildings, heavy machines and all. Okay, now let us see accounting perspective. Generally, important hire purchase system, you have some important things. Yes, important terms. Hire purchase price means the total amount whatever you are paying to the vendor, agreed to pay to the vendor, that is called hire purchase price. Cash price, it means actual price of the asset, whatever is there, that is said to be, sorry, cash price. Cash price represents cash retail price, means if you are paying the cash immediately and taking whatever there, that is called cash price. The hire purchaser would have to pay to the purchase of the goods. Okay. Generally, okay, hire purchaser means the person who is buying the asset on the hire purchase basis and agrees to pay the rents on an installment on a regular basis. Hire vendor, the person who sells the asset or goods under hire purchase system, seller. So hire purchaser is the buyer, hire vendor is the seller. Simple to remember. Down payment or initial payment. Like the out of the total hire purchase price, whatever the value that the hire purchaser paid to the hire vendor at the beginning of the contract or the agreement, that is said to be initial payment or down payment, upon which no interest is charged upon. Okay, no interest. Directly, say for example, if the value of asset is 1 lakh, the total amount payable by the hire purchaser, that is the buyer, is 1 lakh. That is hire purchase price. But the actual cost of the asset is only 80,000. Then that is called cash price. The difference, whatever you are getting, is interest. Okay, and the buyer is said to be the hire purchaser. Seller is said to be the hire vendor. Now, out of this 1 lakh, whatever initial payment means, whatever the amount that the hire purchaser paid to the hire vendor at the beginning of the contract or entering into the contract, say for example 20,000 he paid. So he paid 20,000. Upon that, no interest. So 1 lakh, out of 1 lakh 20,000 he paid, means balance how much? 80,000. This 80,000 he will pay in installments. Those installments under hire purchase system we call as a rental basis. Okay. Upon that, the hire purchaser has to pay the interest. Okay. So what is installment? Periodical payment of the value of the price of the asset. Under hire purchase system, we call it as a rent as per the terms and conditions agreement that they are supposed to pay. Net cash price of the goods under the agreement plus any initial amount paid. That is, say, cash price of the product is 80,000. Initial amount paid how much? 20,000. So what is the net cash price? 60,000. Okay, hire purchase price is 1 lakh. The total you are paying to the vendor is 1 lakh. That is hire purchase price. The actual price of the asset is 80,000. That is cash price. And you are paying in the advance at the time of agreement 20,000 as down payment or initial payment, which is 20,000 initial payment. So from the cash price of the asset, this initial payment, if you subtract, whatever you get, that is 80,000 minus 20,000, 60,000, whatever you get is going to be the net cash price. Upon this net cash price, he will charge the interest. That we will do later. So net hire purchase price, like delivery expenses of all, okay, whatever from the total hire purchase price, delivery expenses, registration fees, if you subtract, whatever you get, that's going to be the net hire purchase price. So that's about recording the transactions in the hire purchase book. Generally, recording for transactions in the hire purchase book is how do you record and all? So generally, assets accrual method, full cash price method, interest suspense account method. Under these three methods, the transactions are recorded in the hire purchaser and vendor books. Okay. Sorry. So methods of recording interest on installments. So whatever, how do they? Under asset accrual method, full cash price method, interest suspense account, by opening of the interest suspense account. Next question, next one is, and again some important points to remember while doing hire purchase system. On hire purchase, I told this, again repeating. So upon down payment, you are not supposed to charge any interest. Hire purchase, how do you get the hire purchase? Cost price plus interest. That's what I said. Our cost price is 80,000, but he's paying 1 lakh, means 20,000 is his rate of interest. Okay. So if you have this formula, hire purchase equals to cost price plus interest, you will be able to get a cost price and you will be able to get the interest. So how do you get cost price? Hire purchase minus interest. If you do, you get a cost price. How do you get interest? Hire purchase minus cost price. If you do, you will get a interest amount. So this you are supposed to remember for the exam, means for the working out the problems. And this is going to be the these are the methods under which you may expect the questions. So that asset accrual means recording of transactions are under these three methods. Okay, but to follow, to record or to work out the hire purchase sums, you need to have a cost price, interest rate, and hire purchase price. Generally, you need to have these three. Okay, to work out cost hire purchase sums, you need the cost price, you need the interest, you need the interest rate, and you need the hire purchase price. If these are not given, how to find is our responsibility, means our work. And sometimes in the question, examiner will not give you the interest rate. Then if interest is not, rate is not given, how to calculate? And if cost price is not given, how to calculate? So these are the recording of transactions. I'll talk to you in a short while. Okay. It's so simple. How do you record? But before you record the transactions under any of these methods, you are supposed to find these which are not given. So for which you need to do little workout. Okay. Let us take an example of the question which is given in our books. Generally, so there are three. When cost price, interest, and hire purchase, both, all three are not given. And there is one more situation when interest rate is not given, when cost price is not given. So three situations are there. So recording will be easy. Don't worry about the recording under any of these methods. I'll tell you that also, like the easiest way. But let us concentrate upon this working. Okay, before you do recording, you need to do this working when any of these are not given. So first I have taken when cost price, interest and hire purchase prices are not given, right? Are given. All three. When all three are given, how to do? When any one of is not given, how to do? Okay. Now, first, in your textbooks, in BRW Ambedkar textbooks, you have like a here Ambedkar textbooks, page number 56, turn page number 56, and question number 1. Question number 1, I think I forgot to give. Question 1, yeah, here it is. Question 1, page number 56, Ambedkar material, if you have, please open, otherwise I'll share you here. No, there only, it's there. I took it. Yes. See, look at here. Please look at this question. On 1st April 2015, please, those who don't have the material, you can look at here. On 1st April 2015, Mehta Mini Wool Private Limited purchased a machine from Automotive Machines Limited. The same day, a sum of rupees 2,200 was paid as down payment, and the remaining was paid in 3 annual installments of 2,200 each at the end of 31st March 2016, 17 and 18. The cash price of the machine was 7,700 and no depreciation was provided by the newly incorporated purchasing company, the vendor charging interest at a 10% per annum. So what is the information given to you here in the question? You have been provided with the cost price 7,700. The rate of interest 10% per annum. Down payment 2,200 and the number of installments 3 and each installment 2,200. Cost price and interest rate are there means higher purchase price is already there with you. Okay? No, okay. Cost price and interest rate percentage are given means higher purchase price is there and equal installments 2,200. 3 into 2,200 plus 2,200 down payment. Add these total 4. 2,200 into 4. 8,800 is going to be a higher purchase price. See here in this table, if you can watch this. Higher purchase price 8,800. Cost price 7,700. So the difference between these two going to be your interest amount. Now look at this, how to calculate this. You are supposed to calculate 10% interest, right? And that 10% interest will be calculated only upon the cash price. Okay, and you are not supposed to calculate upon the down payment. So remember, when you are working out this question, so when you have been given this information in the question, it is the question where you have been provided with all the details. Okay, and then you are supposed to, before you record the transactions in the books of hire purchaser or the vendor, you are supposed to do this working. Look into this working. Columns 1, 2, 3, 4, 5, 6 columns you are supposed to open. The first column is date column, which is compulsory, and remaining also compulsory. Amount of balance brought down means the first date, it's a initial like the total amount. Okay, the next year onwards it comes with the balance brought down for the next year beginning, year beginning, year ending, year beginning, year ending. Okay, and down payment or cash price. Okay, and first installment, first one, whatever you pay on the date of agreement is set to be the down payment. Just all years, whatever is the cash balance to be payable. Next, fourth column is about interest column, where you will show the interest percentage. Interest will be charged upon the cash to be payable. And the fifth column is about the hire purchase price. That is the initial, the installment every month is paid. So from this installment amount, if you minus the interest amount, you will get the cash balance to be payable at the end of that year. I'll repeat once again, please. This will be given to you in this first, whatever I have written in the green, those information given to you in the question only. Remember, the green letters information is given in the question. Only the thing you are supposed to substitute. So first year, if you understand, first 2 years, if you understand, third year onwards, you will be able to do. So first year, what is the cost price given in the question? 7,700. So the first year balance in the account is 7,700. Now, what is the down payment paid or the initial payment paid on the date of purchase or agreement? 2,200. Right? If out of 7,700 value of the asset, if we paid the down payment 2,200, that itself will be taken under the hire purchase price, and that year, that is on the date of purchase of the asset or hire purchase of the asset, no interest will be charged. It's a down payment, so interest will not be charged. Generally, interest will be charged at the end of the year, right? And then the payment will be deducted. But down payment, you don't charge any interest, nil. So from 7,700, if you minus the down payment 2,200, how much is left cash balance to be payable? 5,500 cash balance to be payable for the next year ending. So second year ending or the first year ending, the cash balance to be payable is 5,500. So upon this 5,500, upon the cash balance, generally any vendor charge the interest upon the amount to be payable, not overall, right? So upon this cash balance, at the end of the first year, calculate the 10% of interest, which is also given in the question. So if you calculate upon the 5,500 10%, you are getting 550, which is interest. So in second year, what is the installment to be payable? 2,200, right? Second year, see, first year down payments, first year ending, second year ending, third year ending, 3 installments, right? So 3 installments, equal amounts, 2,200, 2,200, 2,200. You can write this in the beginning itself only when you open the table, okay? Next, and how do you get this? And this first, these two also you can write. The cash price 7,700, down payment 2,200. So from the cash price, down payment, if you subtract, cash balance at the end of the year, you get 5,500. So upon that cash balance, whatever is there, you are supposed to calculate every year. Whatever these values you show here, upon this you are supposed to calculate the 10%. Okay? So 5,500 into 10%, if you calculate 550, which is going to be the interest. So what you are supposed to do now? You are supposed to find the cash balance again at the end of the year. So how do you get that? From the initial amount. That is, this is the installment every day. Equated installments, you say. Equivalent, what is equated monthly installments? You pay now? This is how it is. So what is the installment every year he is paying? 2,200. So from the 2,200 minus this 550. Then you will get cash balance. What is this? From the 2,200 minus this cash balance. That is 1,650 is the catch. Ante end of the 2010, Out of the 2,200 that he paid, installment that he paid to the vendor, included interest plus cash. Okay, interest is 550 rupees, and the cash for that year upon the 5,500 cash balance he paid is 1,650. Understood? So now from the 5,500 amount, subtract this initial amount paid, cash balance paid. How much you get? 3,850. Children, this will be very much helpful to you and very easy and important also for working out the problems on hire purchase. I think I'm clear. I'll repeat once again. The green figures, whatever are there, are given in the question. Okay, first 2 years, if you understand how you are allocating and how you are dividing, automatically remaining whatever the number of years are there, you will be able to do. So please do concentrate. So initial payment, this is the cost price given in the question. This is the down payment given in the question. And so in the first year, you will not pay any interest. So that down payment itself becomes the hire purchase price for the first year or on the date of purchase. Okay, so from the cash balance amount, if you minus the down payment, you will get a balance to be paid to the vendor is 5,500. Okay, so whatever the cash balance due to the vendor, upon that only you are supposed to pay the interest. But your installment includes interest plus cash balance. Understood? Remember this. Your installment, whatever is there, this includes interest plus cash balance. But you are supposed to calculate the interest only upon the cash balance. So you are supposed to find, after calculating the cash interest from the installment, if you subtract the cash balance, you will get the cash balance paid upon that. Okay. So this is the cash balance at the end of each year. Okay, and the end of this 2010, 5,500 cash is due. So upon that, 10% he calculated the interest, 550. So from what is actually installment he is paying 2,200. So from the 2,200 minus 550. Then you will get the cash. So 1,650 cash balance plus 550 interest. Both together he paid to the vendor. The next is that second year again. So first year ending, what is the balance? 5,500. Out of this, you might have, you paid already 1,650 in the first year ending. So from the 5,500 cash balance minus the 1,650 of that year cash balance you paid, you will get 3,850. 3,850. That's going to be the cash balance at the end of the second year, beginning to end of the second year cash balance. Again, upon this 3,850, you calculate interest, because interest will be calculated only upon the cash balance. So upon 3,850, you calculate the interest. Then you got 385. So whatever the interest you got, that you subtract from the EMI that you are paying. That is hire purchase price. So 2,200 included 385 rupees of interest and 1,815 rupees of cost price of the asset in that particular installment. Okay, so this 1,815 asset value, whatever is there, that is to be adjusted or appropriated from the 3,850. Then you got a balance of 2,035. This has to be taken now. Here, this has to be again 1,815 minus 3,850 minus 1,850. You got 2,335. So this is going to be the third year ending cash balance value. Again, from this third year ending cash balance, you are now supposed to take out The balance, calculate the interest. But the last year, don't calculate interest. What is the balance to be payable? 2,030. But what is the installment that you are paying? 2,200. So if you calculate, so now last year, last installment, whatever is there, that what you do from the last installment, whatever the cash balance is there, that you subtract and find the interest amount. Got it? The red mark I marked. That means you calculate. How do you calculate? Whatever the last year's cash balance is there, that you subtract from the hire purchase price, that is installment amount. So the balance is going to be interest and the same amount is going to be cash balance, right? Okay, and no further balance. So if I ask you to do further, no further balance. No, it's a close. Understood? Okay. Shall we? Understood this? Understood? Please reply. Please reply, children. Did you understood? You can chat in chat box. You can reply. So you are being provided. So once you get this passing of journal, hardly not even 10, I think. Not even 10 journal entries are there. If you 5 to 6 journal entries are there, if you learn those, among that some 3 entries you will repeat every year, because whatever one is for purchasing the asset on credit basis, second for payment of initial amount, third fourth entry, third entry onwards, installments, year ending installments, whatever the number of installments are there, that number of years. Under each year, you will write one due entry for installment money, one interest due entry, one received money, amount received, installment received. Almost 3 to 4 entries. So here per year 3 to 4 entries, in the beginning 2 to 3 entries, and these per year 3 to 4 entries, whatever are there, will repeat whatever the number of years are the installments to be paid. Okay, and the end, if any sale or transfer of asset takes place, that. So 3, 4, 7, 7 plus 1, hardly 8 journal entries. I said no, not below 10. Below 10 journal entries you will have, and those, if you remember, you will be able to repeat. Okay, and here next thing is that I forgot to tell. Okay, anything else? Shall I move on to what do you call when interest is not given? When interest is not given, shall I move on to that? See here, interest rate he gave. So easily upon the cash balance, whatever this cash balance is there, we calculated. Okay. And these numbers indicates how you got these column values, children. Column number 1, 2, 3, 4, 5, 6. Column 3 value you will get. Column 5 value minus. Column 4 if you do, you will get a column 3. And column 4 value you will get. Column 2 value divided into Rate of interest, if you do, you will get column 4 value. Column 6 value, you will get column 2 minus 5. If you do, or 3. If you do column 2 minus column 3, if you do, you will get a column 6 value. Okay? Okay. Now look into this. Interest is not given. Say total interest given is 60,000. Number of installments 4. So in the question, like this only, like our first question only. Like this, our first question only. We gave installment, total interest, number of installments, everything we gave. No, see here, look at this question. No interest is given. I wrote no interest given. Rao and company purchased a CC motorcycle for their office use, 8,600 on her purchase system. And immediately he paid 1,600. Okay, vehicle cycle cost is 8,600. Immediate payment 1,600. That means okay. Next, and again 2,400, 4,400, and 1,600 paid at the end of the first, second, third year respectively. So here the installments are not even, different rates. Okay. First year ending, he paid 2,400 rental. Second year ending, he paid 4,400 in rental. Third year ending, 1,600. So total it 4,000, 8,400. Right? 8,400. 2, 4, 6, 1, 7, 7, 8, 8,400. 8,400 he paid. Plus 1,600 if you add. 11,000 is the higher purchase price. From 11,000 higher purchase price minus the 8,600. 2,400 is going to be interest. Interest 10% per asset was depreciated 20% per annum on written down value. Yes. Depreciation also given. Depreciation, if depreciation is given, it's a simple only children. Look at here. Here I gave an example, right? Look at here. 2,800 minus 7,000. Same question I took, I think. The first question only. This only I took. He gave a higher purchase price and cost price. Okay, including down payment, you should take that. So total interest is 1,100. So 1,100. How many installments is giving? 3 installments. 3 installments means give the weights to the installments. First installment 3, second installment 2, third installment 1. That is 3:2:1. Say for example, June, July, August he is paying. So June, July, June 3, July 2, August 1. Like that 3:2:1. If 4 installment, 4:2:1. 4:3:2:1. Like that it comes. So 3 installments. So first installment he is paying 3 ratio. 2, second installment 2, third installment 1. So whatever the total interest is there, that you divide with this in this ratio 3/6. How do you got the 6? I explained under the management accounting also. 3/6. How do you got this 3/6? The first installment value weight is 3. The total weight is how much? 6. 3 plus 2 plus 1, 6. Right? So that is how you got the 6. 3/6. 1,100 total interest into 3/6. If you do first year interest rate, you got. Similarly for the second year, 1,100 total interest into second year weight. 2/6 you got a amount. Third year again 1,100 total interest into number of interest by total. Okay. When cash price is not given, I think I didn't pay. So generally in exam, mostly this kind of question where all three were given only came in the exam. So please do concentrate what to do and how to do. Shall we work out the problem? Shall we? Please respond. In chat box, you can respond. It is already here. I took it. If cash price is not given, paid in instrument is given. Right. Shall we? Yeah. Let us take when the interest rate is not given, this question. Rao and company purchased 3,500 cc motorcycle. Don't get confused. I think this is motorcycle caliber. That is not a value. Forget about it. The office is 8,600 cash price. Okay. Down payment 1,600. Three installments 2, 4, and 16. So let us take that. Question 4, page 56. Cash price given as cash price given as 8,600. Down payment given as 1,600 rupees. Okay, and number of installments 3. Right? And what did he say next? Is the screen also visible to you? Question screen? Are you able to see the question screen? Please. The installment 2004. Okay, 2004, 2,400. And there's the writing part. First installment. Very good. First installment is how much he paid? 2004. Second installment 4,400. Third installment 1,600. is this? He paid third installment 1600, right? Rate of interest also he gave 10%. Okay. Rate of interest equals to 10%. Depreciation, we don't do anything here for the calculation, okay? Only in what you call, only while writing the journal entries, we take it. It is not going to affect your working. Depreciation 20%. Okay? Don't worry about the depreciation. Right. Now, so what is the first installment? Let me take this table. I request wherever you please let me be in the class. Don't look. Okay. Look at here. I'm just moving on this. What is first installment 2400, second 4400, and down payment? Down payment, how much he paid? 1600. So you will get a higher purchase price. Okay, higher purchase price. Add all this. How much is the higher purchase price? 5, 8, 9, 10. Right? 10,000 is the higher purchase price. So cost price is given to us in the question. What is the cost price? 8,600. Right? So interest, do you get? Cost price minus interest, if you do, you will get a, sorry, higher purchase price minus interest, if you do, you will get a interest. So higher purchase price 10,000, cost price is 8,600, so the interest is 1,400. Okay. Okay. The total interest is 1,400. Now this total interest, that is total interest. If EMI is same, that is interest is, installments are same amounts, whatever we did in the first question, we do it. But here in this question, installments are different. First installment, he is paying, first installment he is paying 2,400, second installment 4,400, third installment 1,600. So differently he is paying, right? So what we do? We first take the total interest. From the total hire purchase price, you minus the cost price, you will get the total interest payable. Okay. So this, how many installments is paying? 3 installments. 3 installments means equals to 3 is to 2 is to 1. right? So interest. There is a particulars column. There is the rupees column. There is the interest column. Okay. How do you get? You don't charge any interest here. Now second year. How do you get second year interest? Total interest is how much? 1400 into 3 by 6. 3 by 6 equals to how much you get? 1400 into 3 by 6 to 1400 into 3 divided by 6. 700. Right? $700 is the first year installment. And second year installment interest amount. Interest again 1400 into second year is 2 by 6. So second year installment amount is how much? $467. And third year installment. Are you following? Please respond. Third year installment again. Total interest amount into the weight 1 by 6 equals to 1400 divided by 6. How much you are getting? 2333. Sorry, 233. Okay. So this is the interest. Now the installment. Interest per annum you got. Now what you are supposed to find? Cost price per month, per annum. Cost price per annum. How do you get the cost price per annum? Here, cost price, how do you get total? What is the amount? 8,600, right? You don't need to. Second year onwards, we'll see. So installment paid is, first installment paid is 2,400, in which interest is 700. So cost price included how much? 2,400 minus 2,400 minus 700. So cost price of that first installment included is 1,700. Right? Now second year again installment paid is 1,400 minus interest paid 467 rupees. So 4,400 minus 467 interest. So the actual amount of cost included in the installment is 3,933 rupees. Okay. Next, last installment. The cost installment paid is 1,600 and the interest paid is 233 rupees. The cost price included is 1,367. Okay. Why do you need this? Because when you are passing the journal entries, you are supposed to, you need annual interest you installment anyway he gave, but in that how much interest is paid, that has to be shown in a entry. Okay, and cost price. These have been given. So when do we use? When interest here installments installments amounts are different. Okay, not equal. In first question here, what we did, installment amounts are equal. He paid equal installments. 3, and every month, every year, equally he paid the amount, installment amount. But in this question, installment amount is not equal. Differently he paid. So what we did, from the total installment including down payment, we calculated the higher purchase price. Okay, and we subtracted the cost price. Then you got in total interest. This total interest we multiplied or divided with the number of weights given based on the installments. Is that okay? When interest is not given. So one more is there, when cash price is not given. The same thing here, see, I thought I took some more small example and explained here. As purchase price. So once you get this table, rest of the sum is either passing of journal entries. That's all. Okay. Once you get this, you will pass the journal entries. See the cost price at the end of the year. And installment is matching to 1400. Installment is matching to 1400. Equal to. So 700 plus 467 plus what do you call 233 is equal to 1400. Now this one, cash price. Is cash price equal to? Yes, here cash price you are supposed to take 1600 in down payment which he paid. So 1600 plus 1700 plus 3933 plus 1367. 8600. Tally? Done? Which is equals to the right? Is the cost price. Okay. Once you get this table, you can pass the journal entries. So here, when installments are not equal, and installments are not equal, we calculate like this interest. When installments are equal and all three are given, we calculate in this way. In this question, he gave only cash. So actually, this is the one most repeated question. You thoroughly pass, what do you call, learn other. What about preparation of other accounts? Yeah, we will prepare. What accounts? You need to see. First, if you know this preparation of the table, journal entries, anyway, you will mug up. right? I'll tell you, I said not next class, we have one more class tomorrow, right? In tomorrow's class, I'll tell you how to pass the journal entries. Okay. Whatever the method, hardly 10 to 12, 10 means under all the methods, 10 entries if you learn enough. Among that, 4 entries repeats every year. And if you are able to pass the journal entries, opening ledger accounts is not going to be a big difficulty. Okay, done. So this is an important table in hire purchase system. I hope you all understood. The third method is that is when cash price is not given. Means you have been provided with a hire purchase price, interest rate, and installments, down payment, everything, but cash price is not given. Then how do you do? Look at here. Yes, cash price is not given. Look at this question. 1st April, hire purchase paid is installment. Hire purchase immediately. He purchased a machine on a hire purchase. The down payment is 10,000 and balance is paying in 4 equal installments, 10,000 each installment. Okay, interest is charged 10% on the balance of the cash price. Okay, forget about the depreciation. So let us come back here. So down payment 10%, 10,000, installments also 10,000, 4 installments, interest is 10%. Let us see that. Here, down payment how much? 10,000. Okay, number of installments 70. Oh, 4. Each installment pays how much? 10,000 again. Right? Rate of interest. Is the screen visible to you all? Rate of interest, how much is it? Rate of interest 10%. Screen visible to you all? Right. 5 minutes, this will be gets over. When cash price is not given, we go from the last. We go from last to first year. Okay, from the last year to first year will come. Understood? When cash price is not given, we calculate the last year's interest rate first, then we'll come to the first year's interest. How do we calculate? I'll tell you later. Just a minute. Here only installment amount plus rate by 100 plus rate. This I know. Last year we will come. Yeah. The formula is that into rate divided by rate divided by 100 plus rate. This is the formula. Okay, to get the cash price. So last year, first to 4th year we'll do. Fourth year, what is the installment amount? Every year 10,000 into what is the rate of interest? 10% divided by 10 plus 100 or 100 plus 10. Okay. So can you, someone tell me, calculate and tell me. How much you get the interest? 10,000 into 10 by 110. 10,000 909, right? 909 is the rate of interest, fourth year. Sorry, no cash price paid. Are you working or not? Are you people working or not? Today very less strength. Very good. 909. Next, second or third year. What do we do? To the third year, to the 10,000, we add this. To the third year, to this 10,000, we add this amount of cash. Okay. Cash. So 10,000 ki fourth year paid cash value 909 we add. Then you will get 10,909. Upon that calculate 10% interest at 100 plus 10. Okay. Upon 10,909 calculate 10 into, so this third year installment is 10,999 rupees. Calculate that. So how much you get? Can someone please? 10,909 divided by 110. 99. 9. Oh, very good. 990, 91. Right? Cash price that is. Right. Now, again, second year. Second year, to the 10,909, add 991. 10,909 add 991. How much you are getting? 11,900. 10,909 plus 991, 11,900. Upon this 11,900, again calculate interest. 10 by 100 plus 10. How much you get? 11,900 divided by 110. 1,081. Very good. 1,081. So this is the cash price. Now, first year. To the 11,900 add 1,081. 11,900. 11,900 Add 1081. How much you get? 12,981. Upon that, calculate interest again. 10 by 100 plus 10. 12,981. 11,900 plus 1,081. What? Okay, 12,981 divided by 110. Yes, 1180. Okay, you did it very good. Very good, very good. 1180 is the first year. So now add all these cash balances. So this is interest, I think. 1 second. So how many higher purchase price? Let's see the higher purchase price now. Let's see the higher purchase price. Higher purchase price equals to down payment plus all installments. So 10,000 plus 4 installments equally 4 means 40,000. So equals to 50,000 is the higher purchase price. Now minus interest. How do you get interest? Just interest for all the years, whatever you calculated. Interest for all years. What is this you are getting? Calculate this. Calculate this 14. What is this value? 909 plus 991 plus 1081 plus 1180. 4161. Very good. So that's going to be 4161. That's going to be interest of total interest. So if you subtract that, cash price will get, how much you are getting? 45,839. Which should be equal to this here. 10,000 plus 10,099, which should be equals to, I'll highlight it. 10,909, 11,900, total and C, 12,981. Are you getting the same? Are you getting the same? 45,790 and this is 839. Okay, so let me see once here. Look at here, 8,264. Okay, from the 10,000 subtracted the interest added. Oh, I'm so sorry. To the installment amount, from the installment amount, we are supposed to subtract the interest. Whatever the cash balance that you get, that has to be added back again to the next installment amount. Oh, I'm so sorry. I'm so sorry. What we did, what I made you to do, I made you to add the interest. Stupidity. I'm so sorry. We are supposed to subtract this interest from the installment amount. That has to be, the balance has to be added back to the next previous installment. I'm so sorry. Can we do, or shall I take freshly from in tomorrow's class? Please respond. 909. Okay. 1000 minus 909 equals to 091. Then we'll get 19. Okay. From the 19,901 minus 18,3. Okay, 1736. 901 over 1. How come he get 1736? Can one of you please do this calculation? 18. 1736. Why my calculator is showing different? 19091 by 110 into 10. Now it's 1736. Thank you. One seven three six. So if you subtract that, 1736 from 10,000, you will get 8264. Right? So here 8264 we add. Then you will get 264. 28,165 you will get. By 110. 2,560. So 2,560. Now 10,000 minus 2,560. 9,007. It's a one. I have one more class. I'm so sorry. 10,000 minus 2560. 7,440. Okay, we'll meet tomorrow with the sum. Okay, we'll continue this sum tomorrow. Thank you, children. Thank you for being here. Thank you, Srinivas, for being attentive. We'll do the same. We'll work out the question, and also I'll explain you how to pass the journal entries and how to remember easily to pass the journal entries. Okay, done.